following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Well, good morning. Welcome back to NinjaTrader Live. I'll be your host for this segment, Traders Workshop. And as it is always my pleasure to bring in the wonderful, the great, the superlative Anthony Drager from Edge Trading Group. How you doing, Anthony?
I'm doing good, Tom. Thanks for the compliments.
Oh, yeah, my pleasure. It's always fun to have you on, and you were one of the original guests. So it's when I started here, Traders Workshop was brand new, and I think you were the second or third guest. It was great. So we'll do this again as long as you'll have us.
Absolutely, it's my pleasure. Although I was wrong about something yesterday. I thought you had to wear glasses. I thought that was kind of just a myth when you're looking at the eclipse. So I tried to look at it, and it didn't affect my eyes too bad.
Sure.
But yeah, you shouldn't look at the eclipse. That part is true.
Well, that's good. And there's not another one in this part of the world, I guess, for another 20 years or so. So hopefully, everybody's eyes are recovered and adjusted by then. Did you, where you are, you're in outside of Chicago. Was it very, prominent, or was it just get dark for a little bit?
It didn't even get dark. And what I realized is when you're in the path, which we were not, and a big difference between being in the path and not being in the path. So it was kind of anticlimactic. So next time where we go and where I would probably be living in 20 years, that's going to be right in the path in 2044. But big difference, I think, being in the path and seeing it totally 100% covered and not. So I just get caught up. I've got 4 kids and they're all teenagers at the same time.
Right.
So when you're kind of an immature 50-year-old, your kids kind of make you do things like, Dad, you could look at it. I says, yeah, you probably can.
Yeah, not for very long. Well, it's interesting. My son is 11, my youngest, and he actually got to see it. The school wouldn't let the kids see it because they couldn't guarantee that the kids would wear the glasses, like the little kids. You know what I mean?
Right.
So the older kids in the school got to go out and see it. He was all excited. Just great to see them get engaged.
It's cool. There's no doubt. And I always manage my risk, and trading has taught me that. And that's why, I'm half kidding when I say I looked at it. I just barely glanced, but I could see definitely where it's dangerous. And so you got to manage your risk, and you got to be okay with being wrong and not, be wrong and really have issues.
Right.
So,
Incur damage. Right.
yeah,
Right.
no doubt. But I've got an interesting thing to show you if you want.
Yeah,
That
I love it.
I brainstormed through it, and I, have done it for my group and stuff like that. So I don't know if my screen's being showed. Is it?
It is. It
All right,
is.
perfect. Let me bring up my pen really quick. And all right, so this is for, anybody, I think, just think through this. And most people know stop orders, right? Most people probably use them to manage your risk. So if you use a stop and it's a sell stop, SS for sell stop, most sell stops that are in the book are being used to do what? To cover a long position. And generally, it's to cover a long position for what? A loser.
Right.
So anybody who's traded would understand that. If you're long, you put a sell stop below where price is now. If price is right there, sell stops are always below where price is. And they're generally used to cover a position, and generally for a loser. I know not always, but generally and for the most part. So there's a connection between a sell stop order and a position. But there's also another connection, and I want people to understand it. What's the sibling, so to speak, to a sell stop order type? Meaning, what's it generally connected with? And it's generally connected with a sell limit above, right? Because if you are indeed long, you're using the sell stop to take the loss, and you're using the sell limit above to take the winner. Make sense?
Sure.
And these are the two O's in OCO. If one order gets filled, the other order gets canceled, because OCO stands for order, cancel, order. So if you start thinking along those lines, all right, a sell stop, for the most part, if used to cover a long for a loser, is connected to a sell limit. If a sell stop gets filled, there's going to be less what in the market. When a bunch of sell stops get filled, there's going to be less what in the market? Less longs, right?
Right.
And if you remember from last week, when you're long, you are now a seller to exit that long. Just like in this example, you're a seller up here as a sell limit, or you're a seller down in here as a sell stop. But once sell stops in this example get filled, there are less longs in the market. Does that make sense?
Yep.
So when there's less longs in the market, I'll put LL for less longs. That means there are less what in the market? Sellers.
Right.
There are less sellers in the market. If you're trying to predict where price is going to go next and you think it's going to go up, that's what you want for price to go up. Less sellers, period. If you're trying, if you're selling, if you want the price of your house to go up, you don't want everybody on your block selling their house when you're selling your house, correct? You want less sellers. You don't want anybody in the neighborhood selling their house but you. Then the chance of the price of your house going up is better. Same thing exists in trading any instrument, any stock, anything with a price attached to it. Now I want to say one other thing. And this is what's important about kind of a self-fulfilling prophecy. If price is right here, okay, and you have a bunch of sell stops below it in a certain tight area, let's just assume right below where price is right now, maybe a few points in the ES, we would know, and you don't know this, but you could accurately assume that there's a lot of sell stops down there, like a way above average amount of sell stops. So what does that mean? Based on what we just said, if indeed there's a lot of sell stops down here in a tight area, there must be a lot of sell limits somewhere above. Does that make sense? If there's a lot of sell stops, we just made that connection, sell stop to sell limit. Well, think about that. If there's a lot of sell stops below, that means there's a lot of sell limits above, which makes it a self-fulfilling prophecy to push price into the sell stops. And that's why a lot of times people will get their sell stop triggered. They get shook out of their long trade and then it rallies. And that's a case because you were probably trying to cover or had that sell stop in a location with a lot of other people. So it's not the market is personal and doesn't like you. It's doing what a market does in order to exist. It's the function of a market. It cannot go up if too many people are long. So it has to shake out longs in order to do what it's supposed to do, or else it would always just go sideways. So just think about that a second. A bunch of sell stops means a bunch of sell limits, putting pressure on the market. And as price gets closer to the sell stop, okay, just think about your own trading. You got a sell stop, price gets a little closer, you take your sell limit and say, I'll lower my sell limit down a little bit and take a smaller profit. And then price goes a little closer to your sell stop and you lower the limit a little bit. So as you lower the limit, and maybe others are, you could see how it's a self-fulfilling prophecy to get in and shake out and trigger all those sell stops. I hope that all made sense.
Right. It does. It's, pressure comes to mind, right? The idea of pressure and, what you are, if you're a buyer, you don't want selling pressure, which is what those limits are. And you want, and I look at the pressure as well as obstacles, right? So the more pressure, the more sell limits you have, the more obstacles you have to get to your target up top, let's say, or if you're buying, you want that upward pressure, not downward pressure.
That's a great word, pressure. Yes. So it leads me to, and I wanted to talk about, go to one of your charts, and maybe we'll do that next week, because this kind of was a moment where I'll always circle back with my group and talk about things that I've done many times before, but repetition is key to understanding the basics. And that's what people miss, is you got to keep going back, and repetition to just making it click where what you're trying to do. What is it you're trying to do when you're looking at a chart or you're looking at your dome? What am I trying to figure out here? And that's what these kind of sessions with you guys are all about, is returning to some basic understanding of the basics, because many people skip over it. But let me just fast forward a couple. Where did I go here? Cheat sheet. Let me go one more. All right. Let me just take this one by one. It's kind of a cheat sheet in more shorts, less longs. If you remember, I'm going to walk through each one.
Okay.
If we said, if you're short, you are now a buyer to cover that short position, correct?
Right.
So if you have more shorts, what do you have? You have more buyers in the market. Make sense?
Yep.
And if longs equal sellers, if you're long, you're now a seller to cover that position, and you have less longs, you have less sellers. Make sense?
Right.
So this is the combination that would get price to do what? Go up.
Go up.
More buyers, less sellers. And that's the way I don't want everybody to think when they come into my group. I need them to think that way.
Mm-hmm.
So if you look at longs puke, puke is a word that's slang for exiting a position.
Okay.
From the trading floor days. So when longs puke, that means longs got stopped out. They got shook out. There's less longs. That's what you're looking for, okay, to get less longs. And start using the right kind of industry speak in order to understand what these words mean. If you go into the other side, we're looking for some downside. If longs equal sellers and you have more longs, you have more what? Sellers.
More sellers. Yeah.
So MS is the acronym. If you have less shorts and shorts equal buyers, you have less buyers, right?
Right.
Isn't this the combination you need for price to go down?
Right.
And it is.
It's like competition. I keep coming back to your example, right? If you're a buyer, you want less competition so you can get a better price. If there are more buyers, sellers have the advantage. That price goes up. That's, you really don't want to be there. You want better price, and then more sellers will bring that price up.
Yeah, and I don't want to use some of the examples I use metaphorically because I get in trouble these days with competition. But that's exactly
Well, your
right.
house example is good, right?
We'll stay with the houses.
The
Yeah.
house example is great.
Yeah. You want less competition, and because of what's on the other side. The other thing that I have to underscore, we don't get paid to identify buyers and sellers that everybody could see. They're not unimportant, but we don't get paid for that. We get paid to predict where future buyers and sellers are going to come in.
Right.
So I want everybody watching this to remember that. That's when you get paid, to predict where they're going to come in, not where they came in. If you just know where they came in, you're going to be very inconsistent and late to a lot of trades. You have to put yourself in a position to predict what you do not see yet. And the way you do that is by getting better at knowing if the market is too long or too short, because covering a position is where the buying and selling is going to come in the future. And this has to connect with anybody listening to this. And once it does, you're on the right path. It has to, I tell people, don't take my word for it. Just think it through. If indeed you need to find future buyers and sellers in order to predict the future price of something, how are you going to get there? And you're going to get there if you're better at predicting if the market, again, is has an imbalance of too many longs or too many shorts. And goes right here. Too many longs, that's more longs. If you don't have a lot of shorts, you got less shorts. You turn them into buyers and sellers. So other people's positions is where the meat is. And for whatever reason, it's not basic to most people who try to trade. It was when I started trading on the floor in the pit, because that was the venue of professional traders, right?
Right.
So you understood, when you were quoting, I was an ARB clerk. So I was one of the guys with all the hand signals quoting. And your job was to hey, everybody's long, you would hear someone say. So
Right.
be careful with your bids, showing bids, because everybody's long, which means everyone's going to be looking to sell it.
Right.
So our broker would say, hey, be careful showing too bid. This bit's long. And so it just, once you start thinking that way, trust me, if anybody thinks this is complicated, then make it so it's not complicated. You can't skip over this, is the point I'm
Ye-
trying to make.
Yeah, I think, we're such a we understand transactions, right? We understand what we've done. So just, maybe I'm not a trader, I'm new to trading, and I say, I understand buying Tesla. I understand buying, Apple, because I came from that space, or I had some experience. And now I'm in the futures market. So I've got this added dimension of buying and selling, right? Which you could short stock, but it wasn't something that most people did, new to trading. So it's always about what you've done, right? But I think what you learned, especially in the pits, it's not what you've done that's important. It's what you intend to do. You've got to kind of flip the other side of, well, what do I anticipate? What do I have to do to achieve my goals? If I bought something, I have to sell something. Do I have competition? Am I with the trend? Am I against the trend? But more importantly, is that where the market's going because there are more people like me, or are there less people like me?
It's what you have to do is most
Yes.
important. If you have to do something, you're going to be emotional, and then you have to buy it. If you're short, you have to buy it. And that's when you tend to get into chase mode, because you can't
Right.
be patient anymore. And, we're trying to find areas in the market where it's going to get volatile. Nobody wants to trade a quiet market that's not doing anything, because there's no opportunity. So
Right.
you want there to be some volatility, and volatility, another word for volatility is emotion, right? There's more emotion, there's more volatility. And that's where uncertainty, when there's uncertainty, you get the market to have 70, 80 point, 100 point S&P range days, and you're really moving. Like today was kind of weird, because it was kind of quiet coming in, and then we sold off to the downside. And if you couldn't change your opinion, bullish to bearish, and got caught buying it all the way down, you better be good at getting out, because it had a break. It wasn't just that it had a good break after in the first hour. It surprised a lot of people. And I think that's one of the reasons why it kept going in the first hour, is because it surprised a lot of people. It stuck people long and didn't get a lot of people short. So when you stick people long and there's a lot of longs, there's a lot of what?
A
Sellers.
lot of sellers. Yeah.
It becomes a self-fulfilling prophecy. It always goes back to knowing why something does what it does. And the why is so damn important to anything, but especially trading.
Yeah, and I know, Anthony, you have some proprietary tools that you use, some proprietary data that you can use to analyze that. So I think that's, something that if you're new to trading, check out Edge Trading Group, because Anthony does a great job of creating a community, but also giving more insight into how to identify those areas. I don't have those tools. Support and resistance is kind of what this is all couched under. It's one way to identify where there's interest, right? But it doesn't always get you to where you want to be about what is actually happening, right? I can just tell you where there was a lot of volume trading, or a lot of resistance comes in, support comes in. Those are orders being filled at that level, right? And if it holds over a period of time, it's just these orders are getting chewed up. There's price happiness, we call it, but I don't get a sense of necessarily, are there more shorts than longs there? Which side is really playing out? I think that's, kind of your edge in the Edge Trading Group is identifying that information.
Yeah, and most people are familiar with the acronym VWAP, right? Volume
Right.
weighted average price. Well, we have something called PWAP, and that stands for position weighted average price. So we have a sample size of not every position, a sample size of positions, let's say over the last hour. Okay.
Okay.
And we take an average of where those long positions were opened from. So you
Okay.
take all the ones that we're able to know that are long, and then put kind of align and mark where the average is. So the average long we have as a green line, and the average shorts over the last 60 minutes would be like a red line. And therefore you have two lines that are constantly, updating and moving along with price that represent support, resistance, resistance if price is below, support if price is above, but also it represents like the best pivot that I've ever seen, where you should be bullish above them and bearish below them, or
Right.
transitional when they fly through it.
Right.
They're really helpful.
Well, that's what's really interesting, because you know what the pain points are on average for the sellers and the buyers, right? So if you have an average buyer, where they got long, where those buyers are feeling pain, right? Because if the market starts to trend against them, they're going to start selling to get out of that pain, right? Which is an possible acceleration of price.
I'll illustrate. We got a few more minutes, right? We got about 5 minutes. So
Sure.
I'll illustrate. If there's a red line and we're saying the average amount, the price of all the shorts in the last hour is this red line.
Right.
And right now, price is above it. Therefore, the shorts are feeling pain, as Tom just mentioned, right? Well, what do you think shorts might want to do if price gives them a chance to break even and scratch?
You're going to buy.
They're going to buy it. And that's what you need, buyers, for support to work. For support to actually work, you need buyers down there.
Right.
Where are you getting these buyers? There's a lot of this, the average price of where people are short from. And we already talked about shorts are now buyers. But there's another part of this context. The fact that price is above it means these shorts have been feeling pain. And what I ask people to do when you're trying to predict something that has all the psychology wrapped in it, put yourself in the position of how you feel when you're short, taking pain because price is 4 or 5 handles above you. You're still in the trade, you're down, and price is coming back to give you a scratch, a break even. You're on your knees saying, I'll never do this again. Just let me out. And you got your buy limit in there. And if you don't get filled and it starts to walk away from you, the reason why it's starting to walk away is because all these buyers that were begging for a break even start to say, well, screw it. I'll take a -3. I'll take a minus. And that's creating the chase.
Right.
And there you go. And that has to be why support. You have to know that as the why to start using support and resistance consistently. You have to know why they work when they work.
No, that's great. Yeah. Take a look, if you can, go to Edge Trading Group and check Anthony's site out and look at that PWAP. Because that is a good point, right? It's about, I think a lot of times, we talk about risk management in a kind of a technical, cold, intelligent way, but risk management is also can be emotional, right? And those PWAP levels can be about emotion coming into the market, which if you understand what's happening there, could be to your advantage.
Well, and we'll do this next week because I don't like to be after the fact, but there was a 30 even, our POS were 31 even, and now they're falling down right now, and they're 28, around 26, and that's where the market's rotating on and below. So I think next week we'll pull up your charts, and I'll give you a couple prices that are short PWAP and long PWAP are, and just give you a sense of watching these work with respect to now knowing levels with a little bit of an understanding of why and where they come from gives you the best chance to play them, because now you know why they work when they work. And it's not to get, it's like there will always be most people in anything that won't learn, or I'll give you an example. Everybody knows exercise is important, right? There's no like secret. And if people who are in good shape, like I don't want everybody to be in good shape, so don't tell them about how important exercise is. It doesn't matter. Most people won't use things that they know work.
Yeah.
And that's where an edge lies. And so when people say to you, hey, if you got these great levels, why are you sharing it with people? It's not, well, first of all, it's not just completely sharing it publicly. People have to, they go through a filter to have access to it. But like I said, most people will not use something even though they think it could work. It's just human nature.
Yeah, it's changing. Yeah, it's a little bit of faith there. It's a little bit of changing your habits, and um, you know, that we don't always do what's best for us, I guess, is what you're saying.
People like mystery. It's like, and I joke in the room, I said, if I would have told you this and didn't tell you why, you'd like me more. It's almost because of mystery. They like mystery. People like mystery, and they like to know, what does he know? Think about that. What does that guy know?
Right.
And so that's only gonna last so long. But you got to know why he knows what he knows, and understand a kind of a ready, aim, fire progression in getting to do this and creating objectivity, which will strip out randomness. I know a lot of people experience success, but it's flash in the pan. And then two bad days take away 2 good weeks of trading, and it's because their winning days or weeks or months were just based on some good luck, right? And some of that
Right.
randomness. The market was forgiving. And then when the market isn't forgiving, in 2 days they give away 2 weeks. And that's where a lot of people get stuck. It's because there was no real probability for the trades you were taking that you
Right.
could keep. And it's a lot of too much randomness that people have within their trading, because again, they never learn the foundational stuff. They skip over it, and therefore everything from that point forward is going to seem random, because it is.
Right.
Learn the basic stuff.
Anthony, we're wrapping up, but I don't know how many times I met with, you know, people in the industry, and they didn't want to know how something worked. They just wanted to know how to read it, right? They want to know how to read the chart. They didn't get that fundamental understanding. Okay, you know what? We can do that too, but I was not a proponent of that. We run up against time. I would keep going, but it's always a pleasure to have you on here, Anthony.
My pleasure as well, Tom. Have a good week.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.